Beginner retail day traders, once they get into this industry, the one thing they seek out is a system with the highest win rate. And that, in fact, is a fallacy. In fact, 90% of all retail end up failing. And there's a reason why. See, trading is all about mathematics, and you have to understand your risk. This goes beyond risk to reward. Sure, you've heard you need to make more than you lose, of course. However, what are your probabilities of blowing up an account? If you're new to the industry, new as a day trader, blowing up an account, maybe you've already had that experience. Maybe you're watching this video because you are about to blow up your account. And guys, make sure you check out trade1348.com. Download our app on iOS and Android absolutely free to gain access to our education and our A+ setup system. Let's go ahead and talk about the risk to ruin. Now, guys, I just want to highlight my system very quickly. We had a sell signal here, and this was confirmed by volume. We have our bear strength here with our proprietary RSI indicator, and we have the trend thrust 3000, which gave us our pivot point. Now, we'll talk about the strategy here. Why am I not into trade? Because I missed it, and I am not going to chase trades. In fact, I'm waiting for an A+ setup to the upside, and if it doesn't happen, it doesn't happen. I have no money at risk. Let's go ahead and check out the risk to ruin. You're tired of blowing up accounts? It's time you start paying attention to numbers. We're going to assume that every trader is a 50% trader. Now, why is that? That's because over time, you will default to 50%. The market's binary, it's up or down. So you're going to win 50% of your trades, you're going to lose 50% of your trades. All traders average out at 50. What do we have to do to offset that average? We have to establish a risk to reward to the positive, not a one-to-one. I'm going to show you what a one-to-one looks like here. And even if you only risked 1% of your equity, your chances of blowing up are 100%. Now, when we talk about 1% of your equity, let's just say you have a $10,000 account and you're risking $100 a trade. At a 50% win rate, you're still going to blow up. Okay, we need to improve our risk to reward. 1.5 to 1. Assuming over the long term, we are a 50% trader with 1% at risk, 0% chance of blowing up your account. Now we have a baseline. We need to target at least a 1.5 to 1, knowing that over time we will default to a 50% trader. What could our portfolio tolerate as far as risk? Now, this is where things get interesting. Your risk, your port, how much risk can it tolerate? If we risk 2%, now we're at $200. If you have a $10,000 account, let's calculate that risk there. Your chances of blowing up are 0. We risk 3% of our portfolio and your chances are still below 99%. It's when we start going large here. As you can see, we risk 30% for a risk to ruin probability of 33%. What's this meaning? Well, there's guys who like to YOLO thanks to the Wall Street bets culture. And so you have a $10,000 port and you're risking $3,000, if you will. Your chances of blowing up are 33%. What is the saying? Manage your risk by managing your portfolio size. Let's keep it no larger than 2 to 5%. We see that the probability of blowing up still very, very low. Now, some traders like to target a 2 to 1. This is even better, assuming you're going to win 50% of your trades. For those who are attempting to pass prop firms, let's look at the numbers and let's see how the odds are stacked against you. Now, I teach my community that when you are attempting to pass a prop firm challenge, whether it's Apex or Top Step, you want to risk no more than 10% of your available drawdown. Let's go ahead and take a look at that, right? If we risk no more than 10% of our available drawdown, targeting a 1.5 to 1, your probability of blowing up your account is less than 4%. So there is a 96% probability that you will pass your prop firm, assuming you're winning 50% of your trades, targeting a 1.5 to 1, and risking no more than 10% of your port. Why would someone go ahead and risk more than 10% of their port? Impatience, lack of patience, lack of emotional intelligence. And at trade1348.com, we give you the education absolutely free to help you manage your psychology, help you manage your risk. Let's go ahead and see what we got as far as a trade. If we have anything developing, the answer is no. Now, I had a buy order waiting up here in case we did come back around and break the 200. I risk nothing. I was not going to chase this trend because I missed the trade. Now we could go ahead and look at how NQ is doing right now. Not faring any better. We have our signal to the downside. We have our trend thrust also assisting us, giving us confluence. And then we have our strength indicator also doing the same. So we are bearish. We have our Titan Excel also letting us know, as you can see here in pink. I don't care what you guys say, right? Real men wear pink, right? Also, we have confluence here to the downside with our Titan Excel indicator. And we make our reads very, very simple. Again, volume here is optional. Let's go ahead and check out CL. What CL's doing. This is a trade setup that I actually missed. Why did I miss it? Because I'm busy doing videos. All right, so I missed this trade. We had a signal to the downside. We had one contract here. And of course, you had your one-to-one here, just slightly past it. Our system is going to improve your win rate percentage. What we're looking for is our strength indicator to break below neutral here. And we need additional trending candles to the downside, which you see here right now. Am I going to chase this trade? No. Again, that is another thing that absolutely wrecks retail traders, is the fact that you are not trading from the trade origin or pivot point. You are chasing the candle. When you end up chasing the candle, bad things happen. I missed this trade. I am a very disciplined trader. I should have set an alert for this here on CL, which I didn't. However, our system allows you to create alerts. CL crossing, we go ahead and make sure that we have all the alerts here, right? So in our system, we can configure the alerts within our indicators here in settings, and then we choose our indicator and click create, and then I would have the alerts for CL, which would have prompted me on the move down. But hey, trading's more about patience than it is about making money. Trading's more about making sure you don't lose money so that you actually make money, right? What you see on YouTube, you got Lambos, big homes. I mean, I got that too, but I'm old. I get no street cred. You need to focus on not losing money, because when you focus on not losing money, then the opposite is true. We are just sitting on our hands, waiting to see what the market gives us. Let's look at 6E. Okay, for those who are wondering if this system works with options, it absolutely does. We have a buy order here, and again, that happened pre-market. So if you're trading futures, you got the signal, played it pre-market. You had your strength here along with your trend thrust. That was your simple read. You made bank. Here we're looking at a 1, 2, 3, 4, 5, 6, 6, 7 to 1, 8 to 1. This is an absolute monster of a move. You have no idea how hard it is running a community of 16,000 people, attempting to trade, attempting to do videos. Oh my God. As we can see here, Euro FX futures took a Viagra and just went to the moon. Now let's go ahead and see what's happening here with ES. And ES is just dying. What am I going to be waiting for today? Well, I will be waiting for a mean reversion. We know that the market likes to come back to its means, and so I will be waiting for that pivot, and hopefully I could make some money there. Anyways, guys, this is Gabe. I hope you understand now that managing your risk is everything. Trading is less about systems, trading is less about skill, and 100% about mathematics. And if you don't believe me, then ask yourself, why is the market run by algos? Mic drop somewhere? Applejack's. Put a mic somewhere here. Peace!